Welcome back for another technical analysis update on Gevo Inc. I'm Dr. B on Webull and I will be analyzing Gevo chart today, December 11, before the pre-market. You can follow me on Twitter at tanalyze for intraday analysis tweets, video updates, and to participate in polls to pick the next ticker to be technically analyzed. In the last update, if you remember, we said that we will break out of the falling wedge, and I said that I expected to briefly retest the previous resistance and then it's going to break out. Well, it did that, but it has been doing this for the last 2 trading days, in case you didn't notice, but Gevo is a super slow stock. Alright, so let's go to the 4-hour chart and check how did this look like. So here we had the falling wedge, and then we broke out of the falling wedge here. And what I said in a previous update is that I expected to go back, retest that resistance and use it as a support by bouncing off of it and then go back up. So this is exactly what happened. It went back down a little bit. It bounced off of this with a very strong rejection here that we can see in this candle. And then instead of going up directly, what it did is that it actually went back and retested that level again. So that's the level here. That's the resistance. So if we draw a, we can draw a line. So that line here, you will notice that it tested this 2 times. So one way we can think about this is if we go here and get the polyline and we draw something like this, bounces back up, all the way down again, and then back up again. And then we can hit enter and let's make this yellow. So that could be considered as a double bottom, which is the W shape, and then it should go back up. All right, so that's what we are expecting, but then keep in mind that sometimes what happens is that the breakout fails. So the breakout could fail and go back down and actually drop, but the fact that we had a double bottom here is actually a strong bullish pattern that can actually lead to the actual breakout to be successful. So this means we are going up with a very small possibility of going down, which I do not think is gonna happen. All right, so let's have a look at where this could go to as we break out and the breakout becomes successful. So what I did is that since we are breaking out of this trend, I drew a new trend for it. Now notice that because we don't have much information about it, there is a possibility that this will not be correct and it's not going to hold, and it could take a completely different shape. So that means that here we can see it's holding for now, but the more information we will have today, we will see if it's actually this is the trend line that we can expect. So if it's the trend line that we are expecting actually, so in this case we will see here that this is holding. So what we are expecting here is that tomorrow, even though it's very possible it will go and triple bottom at this level, what we want to see is that it keeps this or holds this level and it starts to go up. All right, so I'm expecting it to go up here, and then so that's pre-market, and then it will arrive or reach the level of the 185, our old friend, which is very strong resistance. So this one here, I think this will be a strong fight today, trying to break that. If it does, and I'm hoping that it will, and I feel that it will, in this case we can expect levels of as high as 1.93, which is also the level of the Fibonacci retracement that we have before. So in this case, that's if it goes up. Now, if it doesn't hold this level, which is the, as we said, the 1.71, the level it's at right now. In this case, we are expecting to go down, and if we are in the right channel, as we can see here, if we are in the right channel in this case, so we are expecting this to go down to this level, which is going to be in the range of 1.46 or so. So that's not going to be nice. We don't want to see it go there. but that is a possibility if it drops. But I really doubt that this is going to happen. Let's have a look at the daily chart. And if you look at the daily chart here, I'm going to gray this out so we don't get distracted by it. So now, as we can see here, these two candles are forming what we call the bearish harami. All right, it's a pattern. So that's the days, the 9th and so the 8th and the 9th. Together they are forming what we call the bearish harami, and bearish harami is obviously from its name, it's bearish. So that's why yesterday it dropped, right? It started low, closed a little bit high, relatively high. It's higher than the day before, so that's good. But that's why we had a drop yesterday. Now, the nice thing about it is that this downtrend is not going to continue. That bearish trend is not going to continue because right now, the 9th and the 10th together, they are forming what we call tweezer bottom, which also indicates a reversal in the trend. So the trend is going down. So now that we have the tweezer bottom, then that means the trend can very well reverse and go up, which we are expecting. All right, so to wrap up, we are looking at it to hold the 1.69 level, which is this Fibonacci retracement level, and it's already closed and holding above. So that's what we are expecting it to do. At least, even if it drops, it holds this one, or maybe even double bottom at this one, the previous resistance. And then from there, we are looking at it to bounce back all the way to 1.917 if we break the 1.85. So these are the levels that I will be looking at tomorrow. Just like Gevo, my new baby channel needs some historical data so I can do some technical analysis. So if you think this content is useful, please subscribe to the channel and spread the word, and tell your friends to subscribe. Have a wonderful day and good luck with your trading.